Well, good morning, everybody. It's 7:30, and we'd like to kick off this coffee and grain marketing webinar with Dr. Singki Lee. I'm David Marison, and I'll be one of the co-hosts today on today's program, along with Bruce Clevenger, who serves as a field specialist in farm management. And we're great to be here with you today for Singki, the fourth edition of Coffee with Grain Marketing with Singki Lee. We try to take a recap shortly after the latest WASDE report has been released, and that's what we're going to do here today as we're pushing towards the end of harvest. Just in a very timely manner, Singki, we had some rain move into the state overnight and this morning, which allows people to grab their cup of coffee and join us here on today's program. I just want to take care of a few housekeeping issues as we start today's program. First, know that in the chat button, we'll be dropping some chats to you if there are some links, for instance, for the evaluation after today's program. We want you to alert you to the Q&A box at the bottom of your screen there on your Zoom screen to use the Q&A. If you have a question for Singki or Bruce or myself even, you can drop that in the Q&A button. We'd be happy to answer those questions real time. And you can see behind me the Ohio Soybean Council logo. And we just want to say a special thank you to the Ohio Soybean Council, who is sponsoring this series of webinars for OSU Extension. And we do so much appreciate their support of our extension programming. And just as a reminder, at the end in the chat box, we'll be putting a evaluation link for you. We sure would appreciate if you would complete that evaluation. Included specially today, there is a teaching evaluation for Dr. Lee as well. That will show up at the end of that survey. But those surveys are so very important to us as we plan these programs and as we look at the next round of these for 2024. So without further ado, welcome to everybody across the state that's logging on. We want to jump in there, Singki, right away, just looking at the WASDE report as we're winding down harvest. Can you tell us how the market is? Where are we currently? What did the WASDE report as it came out last week? What's it showing us? We'll turn it over to you.
Yeah, thank you, David. I think that was a great introduction. Let me share the screen so that I can talk a little more with the table. So can you see this? Great. So yeah, good morning, everybody. Thank you for joining the fourth Coffee and Grain Marketing talk. So without further ado, let's begin with the market snapshot table. So here is the snapshot shown in the November WASDE report. In the balance sheets, we now have quite reliable production estimates. So let me start from the production numbers. Corn national yield is estimated at 174.9 bushels per acre, and soybean yield is estimated at 49.9 bushels per acre. This is the national average. These are not remarkably different from the previous year. As you can see, corn just 0.9% bigger than the last year, and soybean 0.6% larger than last year. Yet, the total production shows a whole different story between corn and soybeans. As we planted more corn and less soybean this year, the corn production is now projected to be over 15.2 billion bushels, which is around 11.1% bigger than last year, which is actually the record high of corn production, and that is the dominating factor nowadays in the market. Soybean, as we planted less, even with a similar yield to the previous year, still it is estimated to be 3.3% smaller than the previous year. So at the end, the total supply will be in corn 9.9% larger than the last marketing year, and soybean 3.1% less than the previous marketing year. So as you can see, there is some different market dynamics going forward in the moving in these two different commodities, overall it looks like so I want to highlight this production is actually the key factor nowadays affecting the market dynamics. And if we look at the demand side in the gray area, this is really still really blurry, and I don't see how much faith we can have with these numbers yet. But overall, when I look at the domestic use in corn, 2.3% larger than the previous marketing year, and in the soybean, 4.8% larger than the previous marketing year. So overall, it looks like USDA expects a slightly larger domestic use both in corn and soybean, but the exports show the opposite direction of projections. Corn export is estimated to be 24.9% higher than last year, while soybean export is estimated to be 11.9% less than last year. Maybe you're going to see a little more details why they made and what kinds of rationale are supporting these projections. But overall, this is basically for two reasons. One is, as we produce more corn and less soybean, we don't have much capacity to supply soybean in the global market and more capacity in corn to export. So that's why these numbers are projected. And also at the same time, all other countries are already perceiving this current market situation and evolution. So that's why in this coming planting year in Latin America, many farmers are likely to switch to soybean. So that is why globally, we are likely to face a little tougher competition in soybean side, which also made the soybean export a little more pessimistic, and corn export will be a little bit softened in some sense. So at the end, the total use in corn projected to be 5.1% larger, and soybean 2.8% less than the previous marketing year. And the ending stock in soybean 58.4% larger than the last year, and soybean 8.2% smaller than the last year. And the season average price, currently USDA projects corn 4.85 dollars per bushel, which is more than 25% down, and soybean 12.9 dollars per bushel, which is 9.2% down. And I also calculated this corn stocks to use ratio and soybean stocks to use ratio. This is basically the number dividing the ending stock by total use. So you can think this as a net supply. And considering this is a net supply, it is not surprising that corn stocks to use ratio has changed from 9.9% to 14.9% in this marketing year, which is about 50% increase, as we are having the record high corn production this year. Soybean side, it is opposite. So stocks to use ratio will be changing from 6.2% to 5.9%, meaning that the net supply in soybean side will be smaller in this marketing year, mainly because we planted less soybean in this March or April. So speaking a little more about the production aspects, I can share the maps. So this is corn yield by state. As you can see, the national average is 174.9 bushels per acre. And one thing I want to highlight is we are expecting in Ohio the record high corn yield, which is about 195 bushels per acre. And actually Ohio, Indiana, and Kentucky, these eastern corn belt states are having really good harvest prospects, which is itself good things and good news, but also at the same time, combined with other logistics issues, is going to challenge growers in this region as well. So I'm going to talk a little more about it later. And this is soybean yield state by state. National average 49.9 bushels per acre. Again, Ohio is expecting record level yield, which is 58 bushels per acre. But also Indiana and Kentucky, they are also showing pretty good yield prospects at this moment. So these are overall we can see how the supply side is moving, but also at the same time, I think this is pretty useful at this point, it is useful to check how the futures market is perceiving the current market situation. Here's the corn futures and soybean futures graph. And I want to highlight two different things. First, we can tell weak fundamentals in corn and relatively strong fundamentals in soybeans. And also when I check the market spread, you can see the significant carries between corn futures contracts. So for instance, from December through July, you can see all the futures contracts are actually getting higher and higher in terms of their price, which is a clear signal of excess supply and show how much the new crop corn is leading the market dynamics, because this is a typical way how market is balancing supply and demand. So by incentivizing grain like merchandisers to hold the grain a little more and supply it later by giving this significant market carries in the futures market. While like in contrast, when you look at the soybean side, it is a little more conventional pattern of the market spreads. So that is the current situation. And one more thing I want to highlight here is actually 2024-25 marketing year. When you look at that, so by and large, the corn futures are adjusted up and soybean futures are adjusted down. And like when you look at 2024-25 marketing year numbers, and it looks like the market anticipates that more soybeans and less corn will be planted in the next crop choice, probably in the US or even outside of US. And that is, I think, the main reason that why in the next marketing year, the fundamentals will likely change quite a bit. So that's kind of something I want to highlight again. So the key takeaways here is, of course, we are expecting record high corn production, and that is driving down the corn fundamentals. And we also have a moderate harvest estimate in soybeans, which supports soybean fundamentals at this moment. So I think that is kind of a little bit hand wavy, but like quick overview of what WASDE report tells us in the November.
Yes, and I really enjoy those graphs. They really are an insight into what the markets are signaling about not just this production year, but also the next production years. Can we elaborate a little bit more on the demand side? What are some of the factors that are really driving this bearish sentiment right now in our market?
Yeah, so speaking of this like bearish sentiments, and actually I don't have many things to talk like in the details about the demand, because no exciting news about domestic demand at this moment, and export is certainly where the biggest uncertainty exists. So regarding this like bearish sentiments, I want to actually talk two different like bullet points. This demand side, especially like regarding the exports information, and also the other one is the logistics, so which is a little more pressing issue nowadays. So let me talk a little more about this like demand side moves. So of course, I want to talk mainly about the export, because that is, I think, where the biggest uncertainty exists at this moment. Here, more corn and soybean supply will likely come from foreign countries this year. That is what USDA report actually says. Like when I look at the world corn and supply production like balance sheets, then I could tell like all these numbers are going higher, meaning that supply side, we are going to see at least more corn and soybean supply. The other factor of, I think, key like fundamental thing is the strong dollar. I haven't talked about it pretty much in the recent outlook meeting or county meetings, but I want to talk about this a little more as well. So let's check the corn export progress. We just passed the 8th week of the marketing year. So as you can see, the red line in the left graph, that is showing our corn export progress, which is actually, and the blue line is actually the previous marketing year export progress. Compared to that, we are doing fine, but compared to the 5-year average, which is the dashed line, we are still like pretty below the 5-year average. Given the current progress, it looks like the WASDE report projection, which is a little above 2 billion bushels, sounds like not a bad prediction. But who knows, because USDA also didn't expect actually this much slow progress in the second half of the marketing year last year. So if we go into the details, what's happening in the current export progress, we can actually check the right figure. To some of you who like have never seen this graph, let me explain a little bit. So this is actually a graph showing the top 6 buyers so far in terms of the corn, in terms of the corn purchase in the global market. So Mexico is the top buyer at this moment, and Japan is the next one. Colombia is the third one. So in that way, the graph is moving. And then the left y-axis is corresponding to the bar graph, which is showing the corn export change compared to the same point of time in the previous marketing year. So compared to the 8th week in 2022-23 year, currently Mexico actually purchased around 140 million bushels more than they did. So that is why it is showing about around 61.4% increase compared to the marketing year. And this blue dot is actually corresponding to the right y-axis, which is kind of the accumulated total corn purchase made by Mexico at this moment, which is around, I think, 400 million bushels. And you can read the graph in the same way for all other countries. And mainly, as we kind of have pretty good production prospects, people are like, and also good quality of crops, many countries are kind of purchasing quite a bit of corn from US at this moment, except for China. Actually, China is showing around 73.4% down in terms of their corn purchase from US, mainly because they purchased a lot already from Brazil, and also it is their main like efforts to diversify their import sources. So they really strive to like step away from like heavily relying on US crop, but also like kind of want to get the channels of crop supply from other countries as well. So that is why we are seeing this graph. So certainly, I think it is worth to check what's happening in Mexico and also China. So this is the graph that I brought from the Fed. So this is the exchange rates that I want to say a little more. So when you look at this, so the 100 points is actually the reference point, which is the pre-COVID level. And compared to that, when you look at the current currencies, the major currencies are all above 100, meaning that these currencies are now weaker than, slightly weaker or significantly weaker than they were before COVID, except for the blue line, which is the Mexican peso. So Mexican peso became stronger than even pre-COVID, but all other currencies are still like weaker. So US dollar is kind of more expensive from their perspective. So Mexican peso appreciation is certainly happening based on this blue graph. And why? So, and actually there are two reasons explaining this situation. Mexican central bank raised interest rate much faster than Fed. So currently Mexican central bank's overnight target rate is around 11.25%, while US target rate is in the range between 5.25 to 5.5. So that is one of the reasons. And also at the same time, actually, China has moved substantial manufacturing in Mexico, which is called nearshoring, because when they are getting the pressure of de-risking, they actually moved their manufacturing factories in many like Southeast Asian countries and also in Mexico. And in fact, when you check the foreign direct investments in Mexico in the first quarter of this year, it increased by about 50% from a year earlier, according to New York Times. So that is why Mexican peso has appreciated a lot. And that is kind of giving a little more purchasing power to Mexican people. So that's why we are seeing this much good progress in Mexico side US corn purchase. Okay, let's quickly move on to the soybean export progress. So soybean export progress is really slow, actually, maybe compared to any years during the past 5 years. This is, I think, the slowest one. And currently, probably based on this and many other like challenges they are seeing, USDA predicted around 1.75 billion bushels as their final number for the soybean exports. And the main reason of this slow progress is certainly because of China, which is kind of coming from the same story that I told you in the corn side. Okay. And one more thing I want to actually quickly emphasize is the logistics. So this is kind of, I think, pretty much continuing issue, but also very much pressing issue, because especially for Ohio and Indiana growers, as we don't have enough capacity of storage. This is the Toledo region cash prices. The black line is corresponding to the left y-axis, and red line is corresponding to the right y-axis. So soybean price for the red line, and black line is the corn price. As you can see, corn price especially plummeted quite a bit, mainly because of good harvest, but also storage issue as well. This is the barge rates, and obviously the low river level issue continues, and recent price stabilization can be explained by the preemptive dredging and load restrictions, but still I think this concern has not disappeared yet. And actually one of the good questions that I got in the previous Coffee and Grain Talk in the third quarter one, I got a question: what if we just switch to other transportation channels like shuttle train? So I actually did a little bit of back of envelope calculation based on the data. When I checked the correlation between the barge rate and shuttle train rates, for the 22-year history, I got 0.46, which is a moderate correlation, which is reasonable. But when I actually checked the data just using the period from July through December in 2022, I got 0.9 correlation, meaning that actually, as expected, people actively switched to the shuttle train at that time because of this river issue. And then we know what's happened at that time. That kind of switching actually didn't resolve the issue, at least probably ameliorate a little bit, but that was not certainly panacea. And I don't think we have a good panacea at this point for this issue. So that's why we have to keep an eye on this. And especially the reason I'm emphasizing here is this is the graph provided by USDA Grain Transportation Report. And as you can see, the storage deficit is kind of presented by orangish colors. And as you can see, Indiana and Ohio is especially the most short in terms of storage capacity. So that's why, given the situation, and we know the good production prospects in this region, and transportation issues happening, which is kind of challenge over challenge, because we really need to move the grain, but also at the same time, we are having the river issue. And without surprise, when you look at this basis map, corn, when you look at Ohio, we are having very, very like weak basis. Soybean also pretty weak because of the transportation as well as the production side moves. Yeah, I think that is kind of explained to some extent the demand side and why I see many bearish signals here and there.
Hey, Sing-Ki, I was wondering as you're going through, there's a lot of great stuff at the national level here, the United States level. But one thing that we always look at is Latin American production. So anything that you're paying attention there as we're looking outside the United States?
Well, certainly, yeah, I think that is a great question. And certainly, I think we should also pay attention to Argentina this year. But anyway, let me just like use this inside scoop from Brazil. This is kind of Brazil, like Conab, which is kind of their national supply company. And basically, these numbers are similar to, their format is even similar to USDA WASDE report. So they also release this kind of estimates every month. So I kind of get it translated and brought the table. And as you can see, this is how Brazilian people are expecting their crops, even though they are now planning the planting. But anyway, when you look at the soybean, they expect 5.1% increase in soybean production, and corn 9.6% down in terms of their production, meaning that they also expect their growers will not plant much corn this year. And there are, of course, many reasons. And one interesting thing I found here is actually they expect their corn export will be around 1.5 billion bushels, which is actually much less than what USDA expects for the US corn export. What does that mean? So that means actually kind of, even though many people are anticipating US U.S. will now stepping down from the top corn exporter in the global market. In this 2023-24 marketing year, it might not be the case. So U.S. might retrieve, re-achieve the top corn exporter position in the global market. That is something I wanted to say. And actually, another reason why Brazilian people are kind of considering more soybean rather than corn, because of the El Nino. So El Nino effects from the December through February, that is shown in this map. And obviously, when you look at this Latin American region, especially this is kind of central west region in Brazil, which is called Mato Grosso. And this is like a corn belt in the US. So main like crop producing region. And they have a higher chance of drought with El Nino. And the drought risk is usually like a little more like severe in corn side rather than soybean. So that's why this is kind of another reason that why Brazilian growers are likely to plant more soybean this marketing year. And I think, considering time, I think I should stop. But I have some like world production numbers here, but basically the same story in Argentina as well.
Sin-Ke, I'm thankful for you to translate the CONAB report. I don't know that everybody can and has translated that report from another language and their figures to what you're representing, very similar to how we would view our WASDE report. So thank you for that translation. That took you some time to do that, and well worth the insight that provides as well. So wrap up questions or thoughts, David?
Well, Bruce, I want to, this is a quick overview, a half hour, grab your coffee, quick overview. I did put in the chat Sin-Ke's email if you want to drop him emails in the future as you're going through. But Bruce, you and Sin-Ke and some others are going to do a really nice grain marketing workshop this winter. And I want to make sure you have time just to give a quick plug for that if you could.
Oh, sure. Thanks, David. So yeah, registration is now live for what we are having an in-person Basics of Grain Marketing workshop. This is going to be held in Marysville, Ohio. Sin-Ke is going to be one of our in-person instructors. We have Grant Garner from the University of Kentucky and Ben Brown from the University of Missouri also joining in on that in-person workshop. It's going to be February 8th and 9th of 2024. And for those of you that visit our farm office website, there's a drop-down menu there for grain marketing, where you can find coffee and grain marketing events coming up, as well as that grain marketing workshop. No prerequisite required as far as knowledge of grain marketing. This is basics of grain marketing. We want to start at a point where people feel comfortable coming in and learning the basics of grain marketing. And then we as a team, we're going to evolve and develop into some other certainly marketing opportunities. And so over the course of the next couple of years, having some in-person grain marketing workshops, as well as some online courses for grain marketing. So registration is live on that, limited seating to about 35, and looking forward to folks taking a look at that workshop, and appreciate Sin-Ke and the team putting that effort together here coming up real soon.
And I think the key there, Bruce, as you said, registration is limited. So great time to go on February 8th and 9th, giving you plenty of time to get that on your schedule, so you do. And I would be remiss if we didn't say thank you to the Ohio Soybean Council as well as the Ohio Corn and Wheat. Both organizations have come aboard as sponsors of that program, and that's the real reason why we can do some of these things, is because the wonderful support from our commodity groups. Just like the Ohio Soybean Council has sponsored these quarterly WASDE kind of recaps, a quick look at it, Sin-Ke, and we appreciate Sin-Ke's your efforts this past year as far as bringing these WASDE reports, but also want to let folks know that, yeah, this is a quick half hour, a snapshot at the reports, but know that Sin-Ke actually will go through and do a follow-up paper. So there will be a follow-up paper with his reactions. And that's why it's so important, those questions that you answer in the go.osu.edu/coffee evaluation. So we hope that you'll go to this immediately after today's program and do the evaluation, because he'll do a recap. And then, as Bruce mentioned, up on farmoffice.osu.edu, drop down menu, coffee with Sin-Ke. and you'll be able to access that report. We'll cross promote that on the ohioagmanager.osu.edu website. So that will be out there. And maybe you want to say, well, I missed something early in today's talk, or maybe I want to go back and look at that the third quarter WASD report that we did. Just know that all these sessions have been recorded, and you can find them up online at farmoffice.osu.edu. So Sankey, Bruce, I appreciate you joining us today for this quick half hour. For those that it's raining and you want to snuggle up a little bit more with some great webinars, know that at 10 o'clock we kick off our Farm Office Live for November, and you can register for that at farmoffice.osu.edu. Our Farm Office team will be doing a complete hour-and-a-half rundown on a whole host of topics, and you can reach that at farmoffice.osu.edu. Sound like broken record there, right? So everyone, thanks for joining us, and we wish you a very happy Thanksgiving. Thank you, everyone.
Thank you very much.